Let's talk about whether or not all of the craziness is going to lead to regulators and other groups saying the market needs to change.
Well, good morning, Don. You know, as you said, structural change, because what we're seeing is that the millennial generation, those individuals from 25 to about 40 years of age, they are the dominant workforce, not only in the United States, but globally. And if we just look at the U.S. market, these individuals are going to be taking in and inheriting about $60 trillion of the $100 trillion that are invested in the U.S. And so what we're seeing is, and this is actually going from the U.S. now, you mentioned earlier, to Europe and Asia, where the millennial generation, they're changing the way that we invest. And we talked about this a lot, in that as the market changes, Wall Street will change to adapt. And so that's what we're seeing. Do we need changes in the regulations? I don't think we're going to see that in the short term. I think this is just a changing of the guard as it relates to markets.
So how exactly do investors like you and everybody else out there adapt to that? That new construct that you just referred to means a change of thought, a change of philosophy, a change in paradigm. What exactly does that do to your investment philosophy?
Yes, Don. So what we look at is that, let's just take example of payments. During the pandemic, we've actually changed the way we pay for things, and that started about 10 years ago. If you look at PayPal with Venmo and Square with Cash App, in the last 10 years, both of those platforms have gained over 60 million users. Now, if we look at JP Morgan, a traditional brick and mortar bank, it took JP Morgan 30 years to reach that same level. At the end of 2020, Venmo had about 69 million, and the Cash App had about 60 million users. So that's an example how, as an investor, you're looking now at the payments. Definitely PayPal, Square, compared to JP Morgan, is a better growth opportunity. So that's just one example.
So if that's one example, then, I mean, you don't wholesale change, Decatur. You don't wholesale change your investing construct just because of this. You allocate, right, to some of those themes. It's not like you're saying this is a wholesale change of the entire marketplace. There are still places that you want to be from the traditional value and growth type perspectives.
Exactly. If we look at the overall markets, and during 2020, what we saw is that a lot of the companies actually started to cut back on their expenses. One example is WestRock, and they're basically the maker of paper products. And what they did is that they actually cut back. Their senior management team took 25% pay cuts, and also they reduced other expenses. So what they're able to do now, they're able to actually benefit for improved margins as the market recovers. And so this is an example of an industrial company that is going to do very well because of their management team. So as an investor, you're looking for those opportunities that will benefit as we get into this reopening trade.
Shepard Smith here. Thanks for watching CNBC on YouTube.